This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. It's a Wednesday morning. We are waking up to calm, settled kind of cues from the US. No big push through higher. And the market here, though, for the last 4 sessions has been very strong. I'm Prashant. With me, my colleague Sonia, and Surbi is joining us today. Guys, hi, morning.
Hi, good morning to both of you.
Good morning, Surbi. Good morning, Prashant. And we're near lifetime highs, just cruising along, waiting for that level to get hit, right? And a lot of cues to track this morning. So I think it's going to be a long day. You have the GDP numbers also in the evening. So lots of cues to reckon with, I guess.
A lot of cues, Sonia. And, you know, the fact is that the market here has been strong, right, for the last, 4 sessions now. Actually longer, because there was that one session where the market dipped a little bit. But otherwise, it's been pretty strong. I'll get to that in just a bit. But there's no big push from the US markets overnight. And that's what I want to start with. This is not significant, but this is meaningful in that sense, noteworthy rather, because the last session in the US before last night was Friday. And Friday, we saw that big push higher on the NASDAQ, which was up about 2%, the S&P, which went up 1.5% as well. And then Monday was a holiday, and then we had yesterday's session. And yesterday, US equities consolidated and fixed income rallied. But the price action has been counterintuitive because data out of the US has been strong. Even, for example, last night we got the consumer confidence numbers, which tells you that the US consumer is in pretty good shape. But what happened? Yields fell, sort of bonds rallied, and you had, equities which didn't really go anywhere by the end of it. S&P was absolutely flat. NASDAQ was up about 1/3%. And you also had the Dow, which was actually down a little bit. One has to remember, though, that the rally out there in the US this year, the S&P, for example, is up 10% YTD. It's been largely led by about 5 or 6 names. Actually 6 stocks on the S&P have contributed to over 100% of the S&P 500 index. I mean, there are 500 stocks and 6 of them responsible for over 100% of those full 10% gains YTD. Anyway, we'll get to that in just a bit. So it's been narrow. That's the point. Oil sold off last night. So you had Brent, which was down about 4% or so. There is I think, an OPEC Plus meeting which is coming up. There was a Wall Street Journal article talking about tensions between Russia and Saudi Arabia. In any case, there was a big dip, which is not bad news for a big importer like India if the prices stay here. Now we come to the market in India. The Nifty, as I said, it's been up for 4 sessions and it's accumulated 350 odd points in these 4 sessions. It's not much. That's about 1.92% or so, 355 points on the index. But the fact is, it's been moving up consistently. Flows have been very supportive as well, which we will get to in just a bit. So some levels really. SGX this morning is indicating a lower start, so keep these levels in mind. The upper end of the rising channel for the Nifty stands at 18,792. We are 1 day and 1 step closer to the all-time high after yesterday's session. We are not very far away, but intermediate levels are 18,792. That's point number 1. On the lower end, the Nifty should not break. I mean, if there is a bit of a profit taking which emerges, should not break 18,420. This level remains unchanged. Actually, both remain unchanged from yesterday's session. For the Bank Nifty, which has also moved up, of course, which has been hitting newer highs, the first target now stands at 44,800 on the way up, which is about less than 400 points from here. Supports stand at 44,100, which is the 40-hour exponential moving average. Just trying to sort of put out some levels very close to where we are. So 44,100, but the bigger one is the 20-day moving average, which stands at 43,705. I would say perhaps a bit of consolidation is due. Will we get it immediately? The SGX is indicative of that. The impulse has been to try and buy the dip, but you don't have to try and buy every dip. That's the beauty about this game. If you're trading, you're investing, you don't have to play every ball. You wait for a sort of clear and clean ball and then take your shot. So that's where we are at. SGX is indicating a start which is around 18,660. Out of the US, there will be a little bit of trepidation around when the debt ceiling agreement goes up for a vote, and that perhaps may happen today, that may happen tomorrow. So I think around there we may see some volatility. Maybe the SGX is indicating of a little bit of that this morning as well. Sonia.
Absolutely. It also feels a little bit like a marathon, right? I mean, you're running hard, running fast, and then there comes a time when you just take a little bit of a break to gather all your ammunition and run again. I think that's what the market is doing right now, just consolidating. Remember, it's been 4 straight days of gains on the index, and this morning as well, we do have a lot of other positive cues too. Brent crude is down about 4% overnight, so that's going to help our own markets. But if you just map the trajectory from the month of March, right? I mean, we're already, in June almost. So March to June, the Nifty has now gained almost 10%. The lows that we hit in the month of March were somewhere to the tune of 16,900 or so. And from there, the market has climbed about 10%. So it's been a pretty smooth run that we've had up until now. Overnight, the flows are a bit mixed. FI buying is very, very strong, over 2,000 crores of buying. But domestic institutions have actually sold in the cash market. So they sold about 438 crores or so. In that context, this morning, you could see a little bit of a dip. That's what the SGX is suggesting as well. The Dow has also been under a little bit of pressure. Remember, the US debt ceiling bill for all practical purposes has been cleared, but just the final announcement is pending. And the final vote is pending, so we're going to watch out for that very closely. There's a Monday deadline to address the debt ceiling issue. So, in the run-up to that, there could be a little bit of volatility. A couple of cues to track on the local front. You have the MSCI Global Standard Index rejig that will come into effect today. And the important bit is there are exclusions in the form of the Adani Group stocks and Indus Tower, and inclusions in the form of Hindustan Aeronautics, Sona BLW, etc. There's in fact a large trade on Sona BLW as well. We talk about that in greater detail. And then you have the March quarter GDP data that comes out in the evening. Now, this is generally backdated information. We already got corporate earnings, so in a sense, we know what the GDP would be like, but it's expected to surprise positively, and that's something that we will be working with as well. The estimate is 5.1%, better than what we saw last quarter. But, so it'll be the sense that you get when you track the market is that this is an uptrending market, but it's just that this level of 18,500, 600 is something that gets a bit sticky. You need some kind of fresh ammunition to take it above that, I guess.
That 18,887, right? That's been just elusive. The bulls have been waiting a while. It's 1.5% away, really, from that all-time high on the Nifty as well. And perhaps it's a question of when and not if. Well, at least that's the mood on the street as of now. You guys forgot the most important cue. Earnings season is finally coming to an end. So we are done with, the hordes and hordes of numbers that we had through the course of the last two odd months. So with earnings out of the way, what next? Can it just be the final, deal getting done? Yesterday, the vote was, by the way, 7-6. That was the House Rules Committee. The actual voting is slated for Wednesday night. Now, that's Wednesday night, US time as of now. So basically, we come back, hopefully with more clarity, Thursday morning. That's the kind of schedule that's been put out, at least as of now. I just want to mention that the DII selling that we saw, this was the first DII sell number for the first time in 7 days. So that was interesting. It was not much of a sell number, just about 430 odd crores. But after 7 consecutive days of very heavy duty buying, we had a minor profit taking from domestic institutions. FII flows are rock solid. I mean, the numbers are absolutely ginormous. Look at that. The tally for May is touching over 41,000 crores. That's the FPI number coming in. By the way, on just another further point on the MSCI changes, the expectation, according to some brokerages, is that net inflows into India could be to the tune of 500 million. That's a lot of the passive money that will come in that's following the MSCI indices. Kotak Mahindra Bank becomes a key watch point because in terms of weight changes, Kotak was always in the index, but it has seen the maximum weight gain on the upside, and the expected inflow for Kotak is almost 800, I forgot to add a million over there, that's my bad, $800 million for Kotak Mahindra Bank. So some of that action perhaps could keep individual stocks excited. Though, of course, these changes will be effective today. They were announced earlier in May, so a lot of that is already in the price. But I guess plenty to keep us occupied through the day.
Oh, absolutely. Lots of, lots of stocks, lots of sectors. So let's get cracking very quickly. In the next 2.5 hours, here's what you'll get to see. First up on the equities front, we have Pedro Martins Jr. of JP Morgan, who says they met institutional investors in the UK and Europe last week. They heard number one positive news regarding technology companies in Asia outside China, that is mostly Korea and Taiwan. Number two, they heard long-term positive views on India, which continues to clash with near-term derating risks due to high domestic rates and slower GDP growth. And finally, thematic interest remains in ASEAN as beneficiaries of China reopening and geographical diversification of supply chains.
All right, let's get you some money market views as well. On the rupee, Kunal Sodani of Shinhan Bank says that the debt ceiling deal struck between US President Joe Biden and House Speaker Kevin McCarthy is facing hurdles. Dollar index witnessed intense selling pressure after printing a fresh 10-week high at 104.5, while the US 10-year Treasury yield and Brent cooled off. USD INR, according to Kunal, should see 82.5 to a dollar as support and 82.85 to a dollar as a resistance level.
Okay, and on the bond market, Neeraj Gambhir of Axis Bank says the 10-year benchmark bond yield traded in a range of 6.98 to 7.03% post the FOMC minutes and expected resolution of the US debt ceiling. The markets are now looking forward to the MPC meeting next week, while the RBI is expected to continue with a rate pause. The language around policy stance and liquidity management will be keenly watched. Neeraj expects the 10-year benchmark to trade in a range of 6.95 to 7.05% for the rest of the week.
All right, we have lots of stocks to track today, and in just a bit in our special top 10 segment, we'll be looking at all of them, and the list today includes Coal India, Sun Pharma, HDFC Life, Torrent Pharma, Mankind Pharma, Prestige Estates, and Lemon Tree Hotels. These are on the radar on the back of positive news flow. Also, Sona, BLW Precision, All Cargo Logistics, Patanjali Foods are some of the stocks we are tracking on the red side today.